Hi there, welcome to Beyond the Rate. My name is Carrie Worth, and today we are discussing reverse mortgages, what reverse mortgages really are and who they're actually for. So, you've probably heard of them, and if you're like most people, you've probably heard a lot of opinions as well. Some say they're a financial lifesaver, others say run the other way. So, which is it? Today, we're clearing it up. And before we get too far into this conversation, I do want to note that Charter West Mortgage Center does not actually originate reverse mortgages. Today's episode is purely for educational purposes to help you better understand how these work and whether they might be a fit for your situation. In addition, we're discussing HECM or home equity conversion mortgages. So we'll be discussing the guidelines for those specifically. So let's get into it. Reverse mortgages explained, what every homeowner over 62 needs to know. I'm with Rochelle Eigsti today, and we're going to get into a lot with her. But before I introduce her, just kind of want to ask a question. If I said the words reverse mortgage, what's the first thing that comes to mind? For a lot of people, it's confusion, maybe even a little bit of fear. So today we're going to clear that up, because the truth is a reverse mortgage, also called an HECM, to repeat that term, can be a helpful financial tool, but only if you fully understand how it works. So today I brought in a reverse mortgage expert to walk us through it in plain English. Joining me today is Rochelle Eigsti. She is with Charter West, and she is a reverse mortgage specialist who helps homeowners make informed decisions, not pressured ones. Welcome to the show.
Thank you.
You're welcome. Yeah, we're excited to have you. So can you tell us a little bit about your background in mortgages specifically?
Yeah, I have been in mortgage and lending to individuals for 40 years.
Wow.
So I am one of those seniors we're going to talk about today.
Okay. So you had firsthand knowledge and
Yeah.
secondhand knowledge.
So I have done everything from processing, closing, shipping, originating, and underwriting, and run those places. So I know everything from the bottom all the way to the top.
Yeah. Even a little compliance too.
Yeah, I did the compliance. Yeah, so I understand that.
You've done a lot.
Yeah.
Okay. And more specifically about reverse mortgages, what's your experience there?
So with reverse mortgages, I've been doing it now. We had a gentleman with Charter West that handled reverse mortgages, and he retired, and I stepped in and took over. And with that, I did a lot of studying and reading, and I wanted to make sure that I knew everything that a senior needed to know, because I have seen the scams. I have seen what reverse mortgage can do to a family if it's not done properly.
Mm-hmm.
Reverse mortgages used to be, and a lot of financial planners actually were the ones that were selling reverse mortgages. A lot of time what they wanted to do with that was get the senior to take all of the money out of the house that they could, and then give it to them to put into an annuity. So it is now a regulation, and everybody has to sign off that none of the money is being used for a financial annuity. So they cannot do that.
Okay.
Because in that case, there's one person that won,
Right. You're a
right?
financial planner.
The financial planner.
Yeah.
So they can't do that. And I get a lot of that questioning why they have to sign that form. And so then I have to explain it. And which then brings the senior into, oh, so you don't do that. Now, let me tell you what reverse mortgage can do for you.
I'm not taking your money.
I'm not
We're
taking
actually
your
giving
money.
it to
And
you.
through the consultations that I've done over the last couple of years, I've told more people not to get a reverse mortgage than to get one. Because if it's not going to be financially beneficial to them, or if they're not going to live in that home for 3 years or more, then the expense of the loan is not worth what it's bringing them.
Yeah.
So so over really the last 2 years, I've been doing reverse mortgages, and I learn more every day that I do it.
I'm sure.
A lot of people think that reverse mortgage is for the destitute, somebody that doesn't have any money. It is very good for people that don't have money, but they own their house outright.
Right.
And in that case, I go and talk with them. I get a chance. I usually go to their house and most reverse mortgage specialists do everything over the phone or through Zoom. Well, most of our seniors, that's not what they want to do,
Right.
or nor do they have the ability to do that. And to me, for them to realize it's not a scam, I'm a real person. I show up at their home. Also, that gives me an opportunity to see if their home's going to pass an FHA inspection.
Mhm.
And if not, I tell them, here, if you do this, this, and this, we can, your house will pass the inspection. And then
Yeah.
here's what you're going to do. So, I've really built some really strong relationships.
Mhm.
Um, and I've built some strong loans for people that it's making a difference.
Yeah.
So, yeah.
Yeah, you really are an advisor.
Mhm.
You're making sure that people are stepping into the right situation. And just for anybody watching or listening today, I actually went through the experience with you with my parents. You
Yes.
told them that this was not the right time for them, and we thought that was great because rather than trying to kind of get them into a situation that wasn't ideal for them because you wanted to close the loan, you actually told them this is not going to work for you.
Correct.
Yeah, that's
Correct.
awesome. So speaking of scams, there is an event that happens in Lincoln, Nebraska that you participate in called Savvy Seniors, right? Can you tell
Yes.
us about that?
Oh, wow. Uh, 2 real estate agents that I know they wanted to get their SRES designation, which is their senior residential real estate specialist, which means that they really concentrate on senior citizens
Mhm.
and getting them either to move out of their house into a, assisted living, and then that senior or that real estate agent will list their house, blah, blah, blah.
Mhm.
Well, 2 of these agents took it a step further and said, let's make a community
Mm.
and provide them with all the information that they need.
Mhm.
And the one in Lincoln, Alicia Castrell actually is leading that Savvy Seniors in Lincoln, and she's a realtor um, with Nebraska Realty. And, she's just done an amazing job with
Mhm.
Lincoln. They had a Savvy Seniors prom, I think it was a year and a half ago,
Oh, fun.
where they had dinner for the seniors, and they had a dance, and they just had a ball. I mean, it
Mhm.
was and they are a community, and then they come together, and, the one in, Lincoln is the first Wednesday of every month, and it's at St. Mark's, I think I don't know which kind of church it is, but I can get that later for you, but
Sure.
it's at St. Mark's Church, and they meet there from 10 to 11 the first Wednesday of every month, and they have panelists that come on. Sometimes it might be, it could be a realtor, a lender, and an assisted living coordinator, and or even somebody that will come in and help you declutter your house and get rid of all the stuff we need to before we go into an assisted living.
That's amazing.
And we chat and answer questions for the seniors. She's had a panelist of insurance providers that talk about Medicare, Medicaid, all of the other things that are so confusing uh, to seniors. I turn 65 next month, and I've got to sit there and consider, okay, do I go Medicare?
Mm.
However, we have such great insurance at Charter West that I'm sticking to the program, and I'll just take Part A
Yeah.
and know that I can actually get a discount on all of my meals now and $8
Right.
for a movie. So I
Right.
do take advantage of the senior citizen discount.
Good,
So
good, as you should,
mhm,
right?
mhm,
Well, nobody really prepares you to become a senior citizen, right? But in the case of Savvy Seniors, they're educating people. They're putting on courses, if you will, about how to avoid scams that often come with reverse mortgages. So that's just a great group to
yes.
be involved in.
Yeah.
Yeah.
And we're starting the Tuesday, or we're starting the one in Omaha. It's going to be called Savvy Seniors Omaha.
Mhm.
It will meet the second Tuesday of every month from 10 to 11. And this next week, actually,
Mhm.
that it's going to be talking about protect what you built,
Okay,
basically.
great.
And they're going to talk about scams
Okay,
and how
perfect.
to prevent that. And there are a lot of scams that happen. We have a woman that lost her home due to a scam.
Yeah.
And
Just devastating
yeah, it's
when
horrible. So,
everything that you have is
mhm.
wrapped up in that home and then you just have nothing to
Yes,
fall back
yes.
on.
Mhm.
That's awful. Well, we're going to talk a little bit more about reverse mortgages, exactly what they are, how they work, how to avoid scams. We've got a lot of questions for Rochelle today. So we'll get through those and we will share the information about the Savvy Seniors at the end of the podcast as well, so that if you're interested, you can attend that meeting. So we're going to start with the basics. Who is a reverse mortgage actually designed for?
So, a reverse mortgage, and I'm going to call it HECM.
Heck on
Yep, that's
HSCN.
no.
Okay.
So we're going to call it a HECM. And it is for anyone 62 and older.
Mhm.
It really works best if you're 68 and older.
Oh, okay.
Okay. And it's based off of the youngest person on title living in that home.
Gotcha.
So if you are 68 and your spouse is in their 50s,
Mhm.
they could be on title, but they will not be on the loan.
Okay. They will not be on the HECM.
Yep, they will not be on the HECM. However, if their significant other passes away, they don't have to change that loan. They can still be part of it because they're on the title.
Okay.
So they just can't pull money from it.
So if their spouse who qualifies passes away, then they can kind of take over that loan.
Yes, but not take any money out. So they don't have to
Gotcha.
pay the loan off, th- but they can still live there,
Okay.
leave the mortgage the way that it is. The one thing that they should do is get a hold of their advisor that got them into the HECM,
Mhm.
so their mortgage lender, which their mortgage lender won't be the same person that's servicing that loan. So
Correct.
I always tell them, make sure you remember my name,
Right.
and I will walk you through every situation that you have.
Right.
And so, you know, when that happens, it's best then for us to relook at them buying out that mortgage, and we do that by doing a HECM to HECM refinance.
Okay.
So, and then it's based off of their age, as long as they are 62 or older.
Okay. All right. So there's options.
There's lots of
And
options.
every scenario is
Yep.
kind of what I'm
Yep.
picking up. Okay. So this is where a lot of confusion starts. There's a lot of nuances, right, around reverse mortgages. People do compare it to a traditional mortgage
Yep.
sometimes. So what is the key difference between the two?
The key difference really is um, it's a mortgage. And when you move out of that house, we've either got to sell the house and pay off the mortgage,
Mhm.
which is the same as a regular mortgage,
Mhm.
right? And so that's how I explain that. However, you don't have to make the payment.
Mm.
There is no payment required other than you have to take care of your own insurance and your own real estate property taxes.
Mhm.
And if you're a homeowners association, you take care of that too.
Mhm.
Each year, then the borrower must certify to the servicer of that loan that they've lived there as their primary residence
Mhm.
and that they paid their insurance and they paid their real estate taxes. And if they had flood insurance, they paid that, whatever it might be.
Okay. So you're actually taking money out with a reverse mortgage,
Correct.
correct? And with
So we're putting money into the house when we're buying it, and when
Mhm.
we have a traditional mortgage, our mortgage payment comes in, it pays the interest, pays down the principal. Your principal comes down and your ownership goes up basically, right?
Mhm.
On top of that. So we call that um, appreciation through amortization.
Right.
And then you have appreciation through value increase.
Right.
And so in a reverse mortgage, you're not paying anything. So the interest is increasing. If you use the line of credit, the principal is also increasing with that interest.
Mhm.
And so you're definitely going to owe more at the end than you do with a traditional.
Right.
But that money is coming to help you live your life in a satisfying manner.
Got it.
So either, and a lot of times with a reverse mortgage, people will say, well, I don't really need the money. And I said, well, then what do you want the reverse mortgage for? And that's really,
Yeah.
it's kind of like a regular mortgage in the way is that when people come to me about getting a conventional loan or FHA, I'll ask them, "What are you wanting to do with your mortgage? What is your goal? If you
Mhm.
want it to be an investment property, if you're gonna live in it, and, you want a place for your family," then I talk them through that. Well, this, they say, "Oh, I have all this, and it's worth," say it's worth $200,000,
Mhm.
what do I do with it? Because I don't have anything in the bank. I'd like to be able to help my grandkids. I have a will, but I don't know how to help them now.
Mhm.
And my in-laws, they wanted to see their heirs enjoy the benefits of their estate
Right.
while they were alive.
Mhm.
And so they did use a reverse mortgage, both for health purposes, but also to help their grandkids and others get homes and
Mhm.
or pay for college. And they were part of that and got to see that. And so
That's really
that's
cool.
a lot of what a reverse mortgage can do versus waiting until they've passed, sell the house, you enjoy it, and they've never seen you enjoy their estate.
Yeah, so it's a different way of approaching the later years in your
Mhm.
life so
Mhm.
that you can kind of reap the benefits of what you've built for so
Right.
long. Okay, so this is important. It's not free money, right? You're not just
Mhm.
getting handed a lump sum of money. You've got some fees and things like that
Yes.
that are involved, right?
Yeah.
Can you tell us about that?
So the fees that the bank is going to collect is they're going to collect the FHA mortgage insurance premium that will be for the life of the loan.
Mhm.
So that could be anywhere from 3,000 to 8,000 or more,
Mhm.
depending on the value of the house that's there.
And can you pay that out of the
It
money that you're
it's
taking out?
yes, so
Okay.
once we figure out your age, the age we're gonna use, and we figure out the value of your home, then we calculate, oh, maybe 36 to 40% based off of your age,
Mhm.
is what we can use for the whole piece. Then we subtract out that mortgage insurance premium.
Gotcha.
We subtract out the origination fee,
Mhm.
and then we subtract out any costs that we're going to have.
Okay.
Um, my back office that handles my reverse mortgages, they're out of California, so I have to work with them sometimes because their fees in California are very expensive.
Okay.
The fees here in Nebraska are not as expensive as what we initially tell people.
Kinda
So
cool.
I always tell them,
Yeah.
"This is a high number. Most likely, that's not gonna be the closing number."
Okay.
So closing costs, which include title insurance, recording fees, it will include your, appraisal,
Mhm.
um, any other miscellaneous fees that we might have in there, are anywhere from $2 to $4,000.
Okay. All right. So we're keeping it fees well, I don't
Yeah,
wanna
fees
say
are probably close to 15 to
okay,
20,000.
so it's something to anticipate.
Anticipate.
Yeah,
It's a very expensive loan, which is another reason I tell people, "How long do you plan to live in this home?"
right.
So if I see the home and it's a three-story or a two-story, I'm gonna ask them, "Do you wanna live in this home for the rest of your life? Or would you rather sell this home
Mhm,
and go into a ranch-styled home?
mhm.
Or do you wanna sell this home and move into an assisted living where you're gonna have a community around you?"
Right,
There's not a right or wrong reason to that, but this two-story home is probably not a place that you're gonna want to stay
right.
as you continue to age. And, for a while there, I was saying learn to age well at home. Well,
Mhm,
it's really learn to thrive at home.
mhm.
And so how do we do that? Well, it'd be nice to have wider doors and not any stairs that I have to go to the bathroom or,
Mhm.
to go to my bedroom. I want everything on one level.
Yeah.
I don't mind having a lower level where my grandkids could stay or whatever,
Mhm.
but they could sell their home. We use the equity from that home to buy, and you can actually buy a home using a reverse as well.
Oh, wow. Okay. Maybe we'll have to get into that a little bit more. Do
Yeah.
you wanna share maybe just some quick details around how that
Yeah, so
works?
I had a family that was from Colorado, and they
Mhm.
had just retired. So they were in their early 60s,
Okay.
and they were both in their early 60s. And they were going to get another job when they came to Omaha, but they hadn't gotten one yet.
Mhm.
And so they were living on Social Security. So when one of our other originators was putting them into a home, they didn't qualify for a traditional. And so he referred them over to me to see if we could do a reverse.
Okay.
And they had a huge amount of equity from their home in Colorado.
Okay.
And we looked at the home that they were purchasing here. I put the value in to my calculator and ran the numbers, and they were able to put, I think it was $270,000 in.
Mhm.
So they had to bring money to the table. They didn't get money from the reverse mortgage,
Mhm.
other than they were able to get a mortgage for about 100, and I think it was 160,000 is what their reverse mortgage was.
Okay.
And they brought in the 200 and something.
From their
Did
equity.
nothing.
That's okay. That's all right.
And so then their reverse mortgage, there was no money then left for them to take money out
Right.
to live on, but they lived on their Social Security. Well, they've now come back to me
Mhm.
and they want to do it again. That house, they don't really they settled for the house that they got.
Sure.
And now they want to sell that house, get the equity out, and buy another one.
Okay.
And that can be a little bit of a problem because, yes, the values went up, but it hasn't went up as fast as they wanted it to.
Sure.
So we're gonna wait probably another year before
Okay.
we move out of that house to
Get the
another.
appraisal, see what their equity
Yeah,
is, that
yeah.
kind of thing. Yeah. Okay. Well, that's an interesting fact. I don't think a lot of people knew that that was a tool that they
Yeah.
could use.
Yep.
Okay. So we're going to talk about kind of breaking it down how it works
Mhm.
essentially. We've talked a little bit about what you need to qualify, but let's get into that just a little bit more. So, what has to be true for someone to even qualify for a reverse mortgage?
Well, what's interesting is we pull a soft credit report,
Mhm.
which, if you asked me, a soft is the same as a hard. It hits your account just as much as a hard one does. But we don't pull all three credit scores, basically.
Okay.
We're pulling one. There is no minimum credit score that you have to have.
Hmm.
However, you do need to, and I'm going to say that this way, is that a lot of times seniors, and I'm going to go to my mother,
Mhm.
after my dad passed away, my dad handled all of the
Mhm.
finances, and my mother handled none. She was an authorized user on credit cards, but she was not a borrower of the credit card.
Mhm.
So, of course, when he passed away, the credit cards were gone. So I had to get her to apply. Well, she had no credit score.
Mm, no.
So then I had to co-sign to get her on.
Mhm.
And I said, she's handled everything. She knows how to handle it. And she goes, but I want that same credit limit. I said, well, you're not going to get that credit limit to start with, but we'll
Yeah.
get you there.
Yeah.
And so, but that was hard. And so that also put me in a position to tell seniors, both of you need to have credit.
Mm.
And yes, you don't owe anything on your house, but you do need some credit because when one of the other of you passes away, if you don't have credit in your name, you're going to have a hard time, even a hard time getting into assisted living if you don't have a credit score,
Right.
because everything is run by credit.
Yeah.
And so I always tell everybody should have a little bit of credit, not a lot of credit, a little bit of credit.
Just a little bit
Yeah,
that you
so
can
make sure your name is
maintain.
on everything,
Yeah.
and a lot of seniors don't do that. Usually, the mail has all the credit.
Yeah. That's
Usually.
yeah.
I think we're running into a new realm of people
New
that you
generation.
probably see more women having the credit than the men.
Sure.
So,
Yeah, that makes sense. So you've got to be at least 62, and we've talked about 68 maybe is more ideal.
yep,
But then you've got to live in the home as your primary residence.
correct. And
And
so, when you talk about that, yes, it has to be your primary residence. That means you get your mail there, you vote in that county, you do everything in that county, you live there at least 6 months, because we do have some seniors that have other homes. They
mm,
might have a summer home in Arizona or Florida, or I had one the other day that had a mountain home, or a lake home that I wouldn't have thought of that people would want to go to, but they do.
Okay.
And so I always ask them, is because they're now selling their primary
Mhm.
and they're trying to figure out, are we going to live in Omaha or are we going to live in another, an, the other state around the, and I said, whichever one, you're male and you're voting and you live there at least 6 months, that is what they're going to look at. And you're going to certify that that is.
Okay. All right. So primary residence. And then what I've got here in my notes, either own it outright or have enough equity to pay off your current mortgage.
Correct.
Okay.
Correct. So, a lot of people, I mean, there are, I mean, there's 46,000 people in Omaha, Douglas and Sarpy County
Mm-hmm.
that own their home outright, that are 62 and older. They own their home outright or have a very small balance on their mortgage.
Okay.
So that tells you, I mean, there's a lot of opportunity there
Mm-hmm.
to learn and to get people prepared to be able to live well in their home.
Yeah.
So,
Yeah.
yeah, so we can pay off their mortgage. And if their mortgage is a little bit too big, they may have to bring some money to the table.
Mm-hmm.
If they want to have a line of credit eventually, I can work out how much money they need to bring to the table that will go then into a line of credit that will grow so that they can use it in later years.
Okay. All right. So there's something people don't always realize. We kind of talked about this again a little bit, but I want to repeat this. So even without a monthly mortgage payment, there are still responsibilities. Can you tell us what those are again?
Yeah, so one, you have to live in the home, you have to maintain the home.
Okay.
You have to pay your homeowner's insurance.
Mm-hmm.
You have to pay your real estate taxes.
Mm-hmm.
And you have to, that's it.
Okay.
That's really it.
Yeah.
And
So it's fairly
it's
simple.
really simple and
Yeah.
it's what you're already doing in your home. What I have found though is people that own their home outright and don't have their they don't have a mortgage payment, so their insurance isn't being paid and their taxes aren't being paid by a bank. They forget that they have to pay their insurance and they forget to pay taxes.
Mm,
Oftentimes, and what the lender that's servicing that loan will do is go out to the county and make sure that you've paid those taxes on time,
mm-hmm.
and make sure that there's not any other liens on the home. And then they're gonna have your insurance carrier send the insurance to them showing that it's been paid.
Okay.
So and that's the one thing, and if you haven't done that, then there's gonna be some issues going forward.
Right. And so when you're paying a traditional mortgage, obviously you can escrow your taxes, your
Mhm.
insurance. Is escrow an option with a reverse mortgage?
So, it is an option, it's an option they don't like.
Mhm.
However, um, if I come and we're going to originate a reverse mortgage and I see that you haven't had insurance on your house,
Mm,
and I see that you haven't paid your real estate taxes, then it doesn't mean that we can't get a reverse mortgage. It means that you better have enough equity in that home that they will then call a life um, estimate settlement account.
mm,
So it's called a LISA.
okay.
And what we're going to do is we're going to hold taxes and insurance for the life of the loan. So that could be a lot of money.
Yeah.
So depending on the age of the person that we're looking at, and it's the youngest person in that home we're looking at, that could be held. We may collect enough for 20 years.
Wow.
We may collect enough for only 10 years.
Okay.
So it depends on the longevity or the life that we think of that
Yeah, that
mortgage.
makes sense. So I mean, you're still paying less than you are because
Because
you
you're
would
not
be
paying.
without your
Yeah,
traditional mortgage.
correct.
Right. But then they're taking that as kind of a lot.
So your line of credit's going to go down because we've got to hold some money
Mhm.
because that those items were paid.
And that's not always something they do, right?
Yeah,
Just
no.
some situations.
And talking about things that they haven't paid on on a credit bureau when we get it, we don't really look at the score, but we do look at your bills to see if you've paid them on time.
Mm.
If they haven't been paid on time, we're going to ask for an explanation of why. Was there an unforeseen thing that happened?
Mhm.
Maybe it was an accident and you were in the hospital. Maybe you were sick and you were in the hospital.
Mhm.
That there are things that can be explained, and I work with every one of my borrowers on writing those out and figuring out why were you late that time.
Okay, okay. So there's an opportunity for
Yeah,
explanation.
yeah.
Okay, so let's talk about how people actually access the money that's coming out of their equity. How can they get their hands on it?
Okay, that's a good question.
Okay.
Um, Actually, we can have it set up automatically that monthly you're going to get a portion of that, and it's called a tenure payment.
Okay.
So, let's say you have 60,000 that's usable and you want it monthly. We will figure out what we think the life of that loan is,
Mhm.
and we will put that into your checking account every month.
Mhm.
If you say, okay, I want my line of credit, I want to be able to just come and get what I want.
As I need it.
And we can set it up to where your checking account is available, and you can go into the computer or call on the phone and say, "Hey, I need $5,000 or I need $500 put into my checking account,"
Mhm.
and they can do it that way as well.
Okay. All right. And lump sum is
And a
an
lump
option
sum.
too, right?
Yeah. The
Okay.
one thing is the first year, let's say you have $50,000 that is going to be available for your line of credit. They will split it into the first year you can get this much, and you could get a lump sum at closing if you want,
Okay.
or you can get that over the life of the first year.
Gotcha.
Whatever you don't use of that will get added to the second year balance that then is there and will grow each year thereafter based off of what is left that you use.
Okay, great. All right. So a lot of
Mhm.
people probably choose the line of credit, right? Because unused funds can actually grow over time.
Mhm.
So talk to us about how the money grows through the utilization of that line of credit.
So actually, it's gonna and we'll give you an estimate of what that is based off of the interest rate that we're charging.
Mm-hmm.
And I do want to talk about the interest rate when we get done.
Sure.
Um, Based off of the interest rate that's being charged and what we anticipate your appreciation based off of historic numbers that we have.
Mm-hmm.
And that's how that money will grow.
Okay.
So it's usually about 4% a year.
Okay. Let's get into interest rate. What are your thoughts you want to share
So,
with us?
we do our interest rates are based off of, a 5-year measurement f for reverse mortgages.
Mm-hmm.
Um, and I can't remember exactly what that formula is
Sure.
other than our margin today is anywhere from 2 and an eighth to 2 and a quarter that gets added to this number.
Mm-hmm.
Right now, the number and it's a floating interest rate, so it'll change every month,
Okay.
and it will be based off of that margin, and, it's running between 6% on the high side and, 5.6,
Okay.
and so the interest rate is on the way down,
Mm-hmm.
so, I always recommend that we go into the line of credit variable rate
Mm-hmm.
versus we do have a fixed rate.
Mm-hmm.
And that fixed rate is at 8%, 8.06% or something like that, around that number.
Okay.
Um, Based off of and that's just a set number. As interest rates come down, that number also will come down, but not if you already locked in at that 8%.
Okay. So are rates different for everybody? Like we can't say that for sure you're going to get this specific rate.
I pretty much can tell them what they're gonna get.
Mhm.
Um, some of the things that we do is I do play with the margin based off of the community that they live in, based off of the value of the home, um, based off what my senior needs.
Mhm.
I kinda play with it to make sure to try to make sure that I can make it work for them.
Yeah. Yeah.
And, that's something that is also a little bit different between, Charter West, Rochelle being your lender, and somebody else in the industry.
Okay.
There are a lot of us in the industry that are doing reverse mortgages. There are a lot of individuals that are doing reverse mortgages because they wanna make the money.
Mhm.
They're an individual entity, and they get paid differently on a reverse mortgage than I do.
Oh,
I get paid my normal commission just like I do on a forward mortgage.
okay.
Um, Other people that do reverse mortgages, if they're doing reverse mortgage only,
Mhm.
they're getting paid a portion of the commissions that are paid in. So like extra fees, a broker fee, and that type of thing. So they're getting more money for doing a reverse mortgage. So their pricing is going to be totally different than the way I
Yeah.
price a loan.
And that money's probably coming from the proceeds, right? So it's an additional cost depending
Correct.
on who you go with. So
Correct.
it's really important to do your
I
research.
want to service the senior, and that's why I'm doing this.
Yeah, yeah. Okay. I love that. When does the loan actually get paid back?
Well, the loan matures when the last person living in it is 150.
Oh.
I thought that was interesting when I found that in the
Do we
guideline.
know anybody that's been 150?
No, I've
Yeah.
seen people that are 110. Well, matter of
Wow.
fact, a friend of mine, her grandmother was 115
Wow.
and lived at home.
Wow.
So I know that it can be done, but I
Yeah.
don't know that I'd want to live till I was 150.
Who
But
knows? Maybe they're having the time of their life.
I know, especially.
Let's hope.
So the other thing I would say, so it gets paid off
Mhm.
when the last person leaves the home and either goes into a nursing home, goes to live with a relative, go to assisted living, whatever it might be, the last person that leaves that home. And then either that person, if they're still alive, can contact the servicer and say, "Hey, I am no longer living in that home as my primary residence. What do I do?"
Mhm.
And here's the thing, if their state already has enough money to cover what is outstanding on the loan,
Mhm.
then they can pay that off and decide what they want to do with the home,
Okay.
right? They can list the home and pay it off and sell it, pay it off, and then the remaining proceeds go into their estate or into their bank account if they're still alive.
Mhm.
Um, it can and so that's the way it goes. If you can't sell your home within 6 months, and that's typically what a reverse mortgage servicer is gonna say, "Okay, well, you've got 6 months to get it sold."
Okay.
And so that gives the family time to go in, clear out the house, do whatever they might need to
Mhm.
make that house more sellable if they want to.
Mhm.
If a family member wants to purchase that home or just take over that loan, I mean, they can refinance the loan, get the home put in the quit claim it into their name or whatever they wanna do, and then refinance the loan into their name. They could do that.
Okay.
I would probably do it as a purchase because if they did it as a purchase, they actually could purchase that loan or that home based off of 95% of the appraised value of the home when we did the reverse mortgage.
Oh, wow.
So if that, that could be a lot less
Yeah.
than what they owe. It could be a lot
5,
less
10, 15 years
exactly,
later.
but
Mhm.
gain all that appreciation, right?
Yeah.
So there's a couple of different ways we can maneuver that for a family member that wants to purchase the home.
Okay.
Um, and then I would say, really the easiest thing is I would sell the home, take the proceeds, and you split it however you want to.
Mhm.
One of the things when I am dealing with an individual, because I think the hardest thing on a reverse mortgage is after I've talked to somebody and they've decided I'm going to get a reverse mortgage and they tell their family has an absolute fit.
Mhm.
And they'll say, "No, no, we don't get anything," or whatever like that. And I think all of us need to remember it's their home. You
Mhm.
don't know you're going to get that home. You
Right.
don't know that you're going to get proceeds from that home.
Right.
Maybe the rest of those proceeds needs to pay for their burial. Maybe it needs to pay for, there's other things.
Mhm.
And it's interesting to me how a family will consider themselves first over the person that actually built the equity in that home
Mhm.
for them and then maybe for their family.
Right.
So I think that's the hardest, but I'll tell them if you have family, and you think that it's gonna be a hard time, let's bring the family in and have a family meeting, and I will run it for you, and we'll just talk about all the questions that they might have.
Yeah.
Once they have those questions answered, they don't care. They wanna take care of the person that's in the home.
That's good. That's good because that's really who it's there for.
Yeah,
Yeah,
exactly.
exactly. So, in the instance that if the house is worth less, mortgage insurance can cover the gap, right?
Well, if the more so everybody's out of the house, and we get an estimate of what that house is worth, and let's say that house is worth, they say it's worth 200,000 and these people owe 250.
Mm,
Well, either they can sell and take a short sale on it,
mhm.
right? They will never owe more than what the appraisal is.
Okay.
And the other thing is if they're not going to get any proceeds from it, they could actually hand the keys over to the lender
Mhm.
and not worry about it. It's not going against anybody's credit. There is no shortfall to the family, nothing. And my in laws, when they moved out of their house, my mother in law had passed first,
Mhm.
and my father in law was there, and he had said, Shell, I'm going to move into a community. I'm tired of being here. And his grandkids, not my sons, but the grandkids, moved in and were destroying the house,
Mm.
basically. And
Mhm.
so we got them all out of there, him out of there, and the house, it had fallen in value because a Walmart center went behind them,
Mm.
and most of the neighborhood was going into rentals, so the value of the home had fallen considerably.
Okay.
And so I asked him what he wanted to do. He says, "Just give him the keys." And that's what we did.
Yeah.
And there was nothing we had to worry about. It also then helped him as he was going into this nursing home because he had no equity in that home, and that's what they looked at.
Yeah.
And so it helped him actually get a better rate on the home that he went into.
Okay.
So if you're short, it's a benefit, and it's a benefit because if your family member is living in their own home, and let's say they don't have the equity, but they need money or they need food, who's paying for that?
Mhm.
Well, it's probably the family.
Mhm.
So if we could use their home to help them survive and live, then that is the best thing we can do.
Yeah.
They're living there not feeling like they're a burden to their family,
Yeah.
and you don't feel like they are, and you're not worried about them because they have the money to be able to take care of it.
Right. Right. So lots of benefits, which we've talked about,
Yeah.
which is awesome, but there are some risks too.
Mhm.
Can you talk to us about what some of the biggest risks might be?
I think the biggest risk, is that the home falling in value, or
Mhm.
the senior not being able to maintain the home.
Okay.
Um, that is a risk.
Mhm.
I think it's a risk anytime a senior is home alone and in that house alone.
Right.
And but let's say that they want to live there and they need help. Um, that reverse mortgage, the money that's in it, and I always tell people this, don't use up all your line of credit because
Mhm.
you may need it to pay for a nurse to live with you
Mhm.
in that home. You may need it for um, a stair lift. You may need it for a hospital bed or for comfort keepers or right at home to come in and help you
Yeah.
with the day-to-day tasks.
Right.
And so giving them options for that.
Right.
And when I come in and I help them figure out how they can use that money,
Mhm.
um, reverse mortgage becomes less of a risk.
Okay.
Um, the other risk is if money's going into their checking account on a regular basis and they have other people on their account,
Mm.
you know, I always tell everybody, be very careful with your checking accounts as well and who's on there because that is a big scam and family members do take advantage
Mhm.
of grandparents
Yeah.
and their parents
Unfortunately.
as
Yeah.
well. So,
That's too bad. So obviously, some other risks, not paying your taxes or insurance. We kind of talked about that,
mhm.
not maintaining the home. or not understanding how the loan grows over time. So it's really just critical for people to get educated.
Right.
And isn't there some sort of stipulation that people need to take a course before they get
Yes.
into?
So before we even start the processing of the loan, they must take, so I do a big proposal for them,
Mm-hmm.
which goes over everything that we've talked about today.
Mm-hmm.
And there's a list of HUD counselors on there, and they must take a course and provide me a certificate that they sign and date before I even order an appraisal.
Mm-hmm. That's great.
In that course, one of the questions they're gonna go over, they're gonna go over that proposal that I gave them to make sure Rochelle told them everything, every risk that they had, everything.
Mm-hmm.
They're gonna make sure of that. They're going to they're gonna go over all of the benefits, all of the risks, and they're gonna say, yes, they understand it. And that's really what that certificate says, that they understand what they're doing. It's signed, and anyone that lives in that home on title
Oh, wow.
has to take that class.
Okay.
That class costs anywhere from $185 to $250. That has to be paid up front
Mm-hmm.
typically.
Yeah.
If I have a senior that just does not have that, I'll tell them, ask them, call every counselor and ask each one of them, can this money be sent to the lender to be paid through the proceeds?
Mm-hmm.
And if they'll do that, then we'll do that.
Okay.
But I also tell them, call until you get the cheapest price as well,
Mm-hmm.
because some of them charge 145, some of them charge 250,
Right.
and they're all doing the same thing. So, one of the questions that they're going to ask them is, "Did your lender tell you who to call?" Because I cannot tell them who to call,
Oh, you can't recommend
and it
anything.
is not. It is by phone or Zoom call that they will get the counseling.
Oh, that's
So they
convenient.
cannot go somewhere, which to me, it makes it easy, um, because they can call anyone in the United States that's a head counselor on that list, and they don't have to go anywhere to do it.
Yeah, yeah, makes it super convenient. Okay, so speaking of education, you brought a couple pamphlets that you utilize when you've talked to somebody about potentially getting into a reverse
Yeah.
mortgage. Do you want to kind of explain
Yeah, I
that?
will. So, and I would say through this talk, if anybody wants to contact me and talk about a reverse mortgage,
Yeah.
financial advisors are great resources for me, and I'm a great resource for them.
Mm-hmm.
One, because, and I've got a guide specifically for financial planners. It's called Reverse Mortgage Made Simple Using Home Equity Strategically.
Mm-hmm.
It's written by Dan Holtquist. He is actually one of the number one instructors for reverse mortgage. I went through his course to get my certification
Okay.
of reverse mortgage. I have to go through that on an annual basis to maintain that certification.
Okay.
Um, that is one thing that I did differently from the gentleman that had reverse mortgage with us before. He did not have that, but he was very good at reverse mortgage.
Okay.
I've got one for that, and I've got one for the homeowner, which is great for maybe my senior totally understands it, but their family doesn't.
Mm-hmm.
I will send it out so that it can be passed along to the family. And in each one of these books probably says the same thing. And it's talking about all of the misconceptions
Mm-hmm.
and really how this can be used. I've got one for realtors on how they can sell homes using a reverse mortgage for seniors.
Okay.
And that's also for anybody that is buying a home that's
Yeah.
a senior as well.
Okay.
So in today's world, um, it's almost hard to find a, a ranch style home for a senior, but they're out
Mm.
there.
Yeah.
And we do have a lot of seniors that are in those two-story homes or one and a half, and it's time to get on one level.
Time to
So yeah.
shift. Yeah, for sure. Well, you have been a wealth of information. I really appreciate all of your time today
Yeah,
and your
thank you.
knowledge. Let's tell people real quickly again where they can find information about Savvy Seniors.
Yeah, so Savvy Seniors, they finally had their own website that shows everything that's going on. It's NE Savvy Seniors. So SAVVY Seniors
Mhm.
is how they spell the Savvy. There's other people that spell it weird, but anyways, So it is the
NESA.
Nebraska Savvy Seniors,
Okay.
yes.com.
Okay. All right. And if people want to reach out to you, you are REIGSTI at
I
charterwest.com,
am.
right? Okay. I
Yes.
got that right. Awesome. Okay. Anything else you want to share with us today?
Everybody just hug a senior.
Oh, I
Yeah.
love that so much. Well, what you're doing is awesome. You're not only helping, the senior community, but you're helping people get educated about what their options are as
Yes.
well. So it's about making an informed decision. If you're 62 or older and wondering how to use your home equity more strategically, start by asking questions. Talk to a professional like Rochelle, get educated. And if this episode helped you, share it with someone who might need it. We'll see you next time on Beyond the Rate. Charter West Bank, member FDIC, equal housing lender.